earn more money but too busy to start a side hustle? Do it the right way and teach your money to make more money for yourself, even when you're asleep. Dale Corpus will show you just how here on the School of Cash Flow. With his entrepreneurial mindset and extensive experience in real estate and finance, Dale will help you become a responsible, strategic, and passionate passive real estate investor. Learn how you can increase your earnings or find more ways to make money, only here on the School of Cash Flow.
Good afternoon and welcome to the School of Cash Flow podcast. I'm the host, Dale Corpus. So today we have another guest that's an expert in the triple net lease space, which I've been covering in more recent episodes. But my guest this time is different in the sense that he's also an expert in a new topic that I haven't discussed yet on my show. We're going to be talking about real estate on blockchain. We'll dive a little bit more about real estate tokenization, and I'm not talking about Bitcoin or cryptocurrency here. It's more so the technology behind it as it's found its way into real estate investing. So this is a new topic for a majority of you. So my guest today, who happens to be the one and only Michael Flight, and he's going to break it down for us. Here's a little bit more about my guest. So Michael Flight is a founding principal of Concordia Realty Corporation in 1990, and more recently CEO of Liberty Real Estate Fund, the world's first net lease security token fund, giving you stable and tradable private real estate. Michael is a real estate entrepreneur and blockchain real estate evangelist who is an expert in the retail real estate, triple net shopping centers, and triple net lease investments, redevelopment, real estate tokenization, and real estate on the blockchain. He started his commercial real estate career in 1985 and has an extensive record of partnering with some of the world's most known banks, insurance companies, hedge funds, and institutional investors in many successful projects. Michael's been featured on CNBC Arabia, CEO Magazine, and quoted in Yahoo Finance, Crowdfund Insider, Crane Chicago Business, and eCrypto News. He's the co-host of the Nothing But Net Triple Net Show podcast, an educational podcast about triple net lease properties and the Chicago Blockchain Real Estate Collective educational meetups. He's also the co-founder of the Blockchain Real Estate Summit. So without further ado, let's begin. Welcome to the show, Michael. How are you?
Hey, Dale. Thanks for inviting me on. It's great to be here.
No, absolutely. Quite an impressive resume, by the way. For my audience that doesn't know you yet, just geographically, where in the world are you? Where are you based out of?
Well, I'm in cold Chicago right now, and we're as I was telling you earlier, we're like 19 degrees, and we've had probably about over the last 4 days or so, about 12 inches of snow. But they got a lot more on the East Coast this time. So,
man, you've been just in your bio, you started in commercial real estate quite some time ago, 1985. Is that correct?
Yeah, I actually started helping do rehabs on apartments with a local investor in the Chicago area. So we were rehabbing apartment buildings. And then I graduated from college and went on to become a retail real estate broker that specialized in retail leasing and selling shopping centers.
Okay. I got you. And you started so early and whatnot. How did you get into real estate investing? Because it sounds like you were doing this. Correct me if I'm wrong. Did you say you started real estate investing while you were in college?
I wasn't doing the investing. I was working for a local real estate investor. I got into real estate investing because my brother and I, while I was a junior in college, attended one of these Nothing Down seminars. They were really popular back in the 1980s. And now all the stuff is done on the internet. But back in the day, these guys would roll into town, go to the local Holiday Inn and rent a banquet room I don't know how we got there or how we found out about it, but
was it an infomercial? Late night infomercial?
It could have been. It definitely wasn't. There was a guy in the 1980s, Carlton Sheets, that was always like, on a yacht, and there was like hot chicks on the yacht and stuff, and so he was a popular one. But there was a few of them. But we soon realized we went to try to buy a house, nothing down, and the real estate broker said, no, the bank's not going to loan you any money because you guys don't have a job. So we, I went a different direction, and like I said, got a job working for this guy. He was a local guy, and we were doing apartment rehabs. And then I, went out, and he said, I can't, pay in, I can't bring you on to what you really should do. You should become a real estate broker. So I had my real estate broker's license, and, I got that, my senior year in college, and started out as a commercial real estate broker, and then eventually ended up working for a large syndicator out of Philadelphia. They owned, I cannot remember anymore, but around 270 to 280 shopping centers nationwide. And then the savings and loan crisis hit. So all these large companies that, and large investors got kind of, caught in the squeeze that there was no money and there was no bank lending. So started our own company in 1990 and haven't looked back.
Okay. You've seen a lot. Can I ask you how many economic, crashes?
COVID is number 4 now.
Okay. And so going back to, just your background, I wanted to, because it's great that you had the experience of being a real estate broker and whatnot. Were you a real estate broker before you started investing, or did you start investing at all before you were a broker?
No, I became a real estate broker because I took the licensing course for Illinois to be an Illinois real estate broker, because I thought I could learn how to do real estate investment. And I learned that they really don't care what you know. And it was a frustrating class because the guy that was teaching it, I would ask questions. He's like, no, we're only covering what's in the book, because all you have to do is answer these questions. And I'm like, well, but why does this happen? And he's like, no, we're only covering the stuff in the book. You just have to answer these questions. This is just to pass the test. So basically there's a bunch of people, and it still is the case because I have to take courses every 3 years to renew my license, that all they care about is that you memorize the answers to the questions. They don't really care that, it seems to me they don't really care that you know anything about the actual real estate transaction or anything like that.
Yep. I mean, it's like, I'm a realtor as well. If you're talking, like, I always tell people, just because you pass your real estate exam doesn't mean you're like a real estate expert and whatnot.
Right.
It's equivalent to driving. Just because you pass your driving, exam, that just means that you can drive. It does not mean you're a good driver.
Exactly. That's that's the point. So there's a lot of great real estate brokers out there that actually go out and do homework and understand. And one of those great ones that you and I both knew was Bob Helms. Oh. And he actually wrote a book that was, really good, for real estate brokers as to how to invest. So, just talking to you brings up a lot of memories for, some good times.
Oh, absolutely.
With the Helms family.
You got into commercial right away, it seems like, and it's, how did you found yourself in the triple net lease space? And I just wanted to even just talk about that right now. What do you find so compelling about triple net lease properties as an investment asset class?
The biggest thing is my experience has been working with shopping centers and working with retail leasing, and also working with single tenant triple net properties. And I've also done the gamut from condo conversions to house flipping to, you name it, we've done it, except for industrial and self-storage. But the best thing about single tenant triple net stuff is that there's really not a whole lot of work. It's kind of set it and forget it type of thing. So I like to say there's no tenants, there's no toilets, there's no termites, and the tenants pay the taxes. So, what's not to like about it? And, that's why we named our podcast Nothing But Net, because you get nothing but net income. A lot of people describe shopping centers as triple net properties too. They're not quite triple net, because you as the landlord end up having to maintain the walls, the structure, and the roofs. And you as the landlord also need to provide the services like the sweeping of the parking lot, the landscaping, and in northern climates like where I live, snow plowing. And so you need to do all that stuff, arrange for the contractors and stuff, and then you need to bill it back to the tenants. So it's complicated bookkeeping that way. The great thing about net lease properties that really just blow away owning an apartment, to me nowadays, blow away owning an apartment building or a shopping center, or I've owned office buildings too, which are a large pain in the butt to manage, is that if you get a quality tenant in a quality location, again, it's just that a lot of them don't even want to send you a check anymore. They just send you an ACH payment directly to your bank. It's that way with McDonald's. It's that way with Walgreens. And those things typically hit the bank account anywhere from 5 days to the day of, the first day of the month. So there's no calling up people, chasing them. There's no, sending people out to knock on doors to get the money.
Okay, I got it. Just the other week, I had a guest that was also in triple net space. His focus was on industrial, and so it's nice hearing somebody else all talking about triple net leases, but this is different. We're talking about retail. What do you like about the retail side of things as opposed to other triple net types of classes like industrial, for example?
I would say that I'm kind of stuck in the retail because that's what I know best. But what I do like is that in retail, you also have to know a little bit about the tenant's business. So you get to learn a lot about, how tenants operate. So in industrial, you basically have to, have the right ceiling height. You have to have the right number of docks, and it is a little bit location specific. But with retail real estate, it's extremely location specific, and particular tenants can do better in particular locations. So, for example, if you're working with a Starbucks or a Dunkin' Donuts or a Dutch Brothers, they typically want to be on the morning side, the morning commute side, and so it's just little different things like that. With restaurants, you need to actually know, a little bit about the restaurant business and whether they get most of their, business for breakfast, or whether they're, doing a late night thing, all night drive through. So like I say, I really enjoy that part of it. And there's kind of like some glamour parts to retail real estate too, because there's a lot of places where people like to go, and a lot of the stuff we do is necessity business and bread and butter, but we also had back in the day some malls and things like that, and those are more about creating places for people to go, places for people to meet, to gather, and merchandising a shopping center like a department store would merchandise to create a synthesis of and attract a lot of people that would if they come for one thing, then they'll shop for other things.
Speaking of retail, and speaking just the times that we're in, how hard has retail been hit by COVID? Like, how has that affected it, and how has it affected that space?
Well, in some of our shopping centers, in particular, a few that were in non-great states that had locked down and shut down the tenants and things. Mm-hmm. We had like up to, in one of them, 55% of the tenants closed for business. And that precipitates, because it wasn't our first rodeo. It's like, okay, these guys are closed down. They're not going to be able to pay their rent. We better get on the phone with the lenders and tell the lenders that we might have to do separate side deals with the lenders or the tenants, so that, because they can't pay their rent. So we might have to forgive some rent. We might have to make them pay the rent back over, a year, 2 years later when they reopen up. And you need to get lender permission for that. You just can't go out and say to the tenant, oh, by the way, you don't need to pay your rent for 2 months. So we did that first, and then we started working with the tenants and the little guys. We worked to just help them, get their rent forgiven, because they're just like hanging out for dear life. And then some of the larger, well-capitalized guys, we, just worked out situation where they paid us back over a number of months.
Okay, I got it. Triple net investing is something that I haven't participated in yet, but it's just like, I just love the fact that it is like mailbox money. It's just, sometimes I can't believe how much little you have to do.
Yeah, and I do want to address the single tenant properties did magnificent because of the type of tenants that we focus on. And we made a decision back in 2017, 2018, and 2019 to say what type of tenants aren't going to be disintermediated by the internet. And those type of tenants also have proven to be kind of pandemic resistant. So the triple nets, just worked perfectly. And the cap rates by the mid 2020 to the end of 2020 just dropped dramatically, because people just said, I need a flight to quality. I'm not sure about this residential moratoriums. I'm not sure if people are going to continue to stay in self-storage or, give those up. And so I know that, what we like to describe triple net leases as bonds wrapped in real estate, because you get the quality big corporation paying a long-term thing, and it's just there and it just clicks off. That the difference is the shopping center suffered, and the single tenant triple nets, except for some of the full service restaurants and some other tenants, really weathered the storm pretty well.
When you're talking about the single, tenant types of scenarios and whatnot, are we talking about like fast food drive-throughs, or are we talking about something else?
Well, it could be a fast food drive-through. We do have those. Our current fund, we're investing in auto service. So anything from Jiffy Lubes to transmission guys to repair guys, but they're the large national change. And so, for example, like a Jiffy Lube, you could either get a well-capitalized franchisee on your lease, or if it's a corporate store, it's Shell Oil Company. And so I, love the credit of Shell Oil Company. They're one of the services. We look at grocery stores, and also we also do drugstores, dollar stores, necessity businesses. And the other thing we really like is cellular phone stores.
Why cellular phone, out of curiosity?
Because you still have to go in and get your phone and all the rest. You can buy your phone on Amazon,
right?
But a lot of people, and most people, end up just buying it from the cell phone store or the mobile phone store, and so there's a lot more interaction there. The other thing that I really like about them is they're usually really well located, like in the middle of a retail nexus, like out on the out parcel of a regional mall or something like that. And so if the tenant is and the great thing is that you get either AT&T credit, Verizon credit, or T-Mobile credit, which are all nice, strong corporations. But if you have to take the space back, because if the tenant closes, they're normally just really nice, beautiful boxes that you can release to some other type of tenant.
What's the typical type of profile for an investor seeking a triple net property? What do they focus on? What do they look for? I mean, are they looking for location, financial strength of the tenant, term of the lease? Can you elaborate on that?
It really depends. If it's an institutional investor like a REIT or, pension funds or, some of the institutional guys, they primarily underwrite completely with credit. Whereas when we underwrite, we start with the location of the space. And then, we of course underwrite the credit of the tenant. But the main driver for us is the location, because we're very skilled and very experienced at repurposing triple net leases in case the tenant blows out. So that's what we want, a solid location, because we believe that the location is a lot of times worth more than the credit of the tenant. And that's been proven out, especially if the tenant doesn't renew. A large driver of triple net investments is people that have owned apartment buildings or things that were more intensive, like mobile home parks or that. And then they want to trade into something because they're at a particular point in their career, similar to what I am. I don't want to really deal with a large, heavy rehab type of situation anymore. I'd rather invest in get just quality cash flow and, know that it's there. And then the other thing is, if you take a look at the difference between the returns from, let's say, a value add apartment building and what I see some syndicators coming out with and saying, oh, we're going to get these type of returns. And then what you can get with a pure triple net lease. A lot of times the risk on construction, the risk on, execution of the business plan and everything else doesn't make up for what you can get right now immediately by buying a triple net lease, and the money just cranks off monthly. So, but again, a large driver, probably 50% of the market in triple net restaurants and retail is, people that are selling previous real estate deals and trading into another deal, doing a 1031 exchange.
Okay. I want to talk about like mitigating risk. How do you mitigate risk in these retail types of triple net, lease investments?
Well, the biggest risk mitigation is that the tenants pay for all. So you going in cap rates and going in returns are a little bit lower, but you mitigate your risk because the tenants are paying for all the expenses. So the biggest, driver right now and things that is going to hit a lot of apartment projects and a lot of other projects that, are not triple net is real estate taxes, because a lot of these municipalities need money, especially in the north. There's all these municipalities that have all these pension obligations, or, if you take a look at California, it's just a pension bomb out there. Mm-hmm. And that's all going to be paid for by real estate taxes. So, and that's the thing that you have to worry about. If you don't have a control on your expenses are going to start eating into your return. With triple net properties, you still have to make sure that, the expenses are reasonable. Because the tenants are paying them. And if they pay too much in expenses, they're not going to pay you that in rent. But the great thing is that the triple net mitigates the risk so that the tenant pays for the tax increases. The tenant pays for any type of, maintenance increases or labor increases or things like that. And they, as a retailer, can push that onto their customers because they can change their prices much more, sensitively than, a real estate owner can. Okay. So they can, like one day to the next day say, oh, milk is, now $4 a gallon instead of $3.50 a gallon.
Okay. This is something I want to know the answer to. Is the biggest risk in triple net investing, is it if the tenant goes out of business, or is it something else?
There's two large risks. Number one, the risk that the tenant goes into bankruptcy, and then if they go into bankruptcy, they automatically have to pay you rent. But if they liquidate, or, once they go through their bankruptcy, they can close non-profitable stores. So your store could be closed. The other major risk is that you get a long-term lease, and the lease is for 10, 15, 20 years, and there's no rental upside. And so the risk is that you're going to lose money to inflation. So those are probably the two largest risks in a triple net deal.
Speaking of inflation, what are some of the diversification strategies that investors can use to hedge against inflation and create passive income?
One of the things they can do is real estate protects pretty well in times of inflation, and hard assets protect pretty well in times of inflation. I will say that if you're investing in, and I'm just going to, make a general statement. If you're investing in a Dollar General and it's in the middle of West Virginia, or it's in the middle of, Nebraska or something like that, and it's got a 15-year flat lease, you're probably not going to keep up with inflation. What you also want to be aware of in triple net leases is to have it in very good locations too. So if you've got a Walgreens or even a Dollar General in a better area of Florida or Texas or Tennessee that shows real growth and strong growth, even if the tenant doesn't renew their lease, that the underlying property value is going to go up because you've got it in a great location. It's on a corner. It's got accessibility. It's got visibility.
Okay, yeah, that makes sense. What about leverage? I'm curious, what kind of financing on retail, these triple net leases, can somebody get? Like, what kind of leverage? How much down does somebody have to put?
The great thing about triple net leases, depending on the credit of the tenant, but if you get a quality credit tenant, like for example, I use the Shell Oil Company with Jiffy Lube, you can get much higher leverage, and it's non-guaranteed, so you don't have to personally guarantee it. Because I walk into the bank, but most of the time we don't deal with banks. But I walk into the bank, and the bank says, "I want you to personally guarantee this." And I say, the Shell Oil Company is guaranteeing it. So what difference does it make whether I personally guarantee it? Because Shell Oil Company has a lot more money than I do. So they underwrite it based on the credit of the tenant. And they also underwrite it on the location and, the length of the lease. But the other great thing about sometimes if you get what's called a credit tenant lease, which is a CTL, you can get almost up to 100% financing on something because it's just basically like a bond. Oh, wow. So if it is a AAA tenant, or if it's a great tenant, there's all kinds of financing out there for it. We typically don't like to go over 65% loan to value just to be conservative. But there's a lot of people that depending on where they're at, or if they're doing a 1031, and if they only had 50% loan to value on the 1031, you have to make sure that you match your debt to equity that you had in the old deal.
Got it. So just the way we're talking, it sounds like pretty much all of these loans are non-recourse types of loans, right?
Sometimes, for the most part, if it's a local tenant, or if it's a franchisee, or depending on what type of tenant it is, you might have to personally guarantee it. And it also might depend on your experience level, because the bank, always underwrites you as the borrower and says, how experienced you are. And so, when we get involved with something, the bank says, well, what have you done? And we tell them that, and then they've got a comfort level that we know what we're doing.
Okay. Can I ask you about what, like, a typical deal that you would go for, what it looks like in the triple net, for your triple net lease stuff?
Sure. We look, because we want to get geographic diversification, financial diversification, and, tenant credit diversification and industry diversification. We will look at single tenant triple net deals, like I said, in the necessity retail or automotive or medical, what we like to call medtail space. Okay. And we look at deals between $1 million and $5 million because we're trying to put together a portfolio that we can have a number of different tenants paying in. So if one of those tenants happens to go into bankruptcy or happens to close or something like that, it's not dependent on, completely one tenant. Or if there's a hurricane in Houston or, somewhere in Tampa or on the West, somewhere in Charleston, that particular store might be wiped out, but you've got other, stores in different markets throughout the South and Western United States.
Okay, I got you. Speaking of geographic locations, are there certain states that you tend to focus on, and versus, and some that you shy away from?
Yeah, there's definitely. Somebody saw what our what our acquisition criteria was, and we just had a bunch of states in red that said not interested. So states like California, Illinois, New York, Connecticut, Massachusetts, those are states that we are definitely not interested in. The real estate taxes, the regulations, and just the political instability, because you don't know if those states are going to actually close down, the businesses that are operating in your stores or in, your industrial. I mean, this impacts industrial buildings too. So it depended on that. What we really do like is what we call the smile states. So everything from like Washington State down through Nevada, across the bottom. We really like Tennessee too. And then, up through Virginia. And Virginia is one of those states that we like. It's hard to get, properties in Virginia, but we really like it because, and, it's unfortunate to say because I don't like the growth of government, but there's some of the highest, income zip codes in Virginia because all those people work for the government.
Got it. What was your most challenging deal or investment so far in triple net? Can you elaborate on that and just how
Sure.
you?
We in the mid 2000s we bought a portfolio of bank buildings from a real estate investment trust that only invested in banks. And the real estate investment trust was having financial problems. So they were selling off packages of, triple net banks. And so we bought a portfolio that was pretty much through the South. And then, it had one or two out West, like New Mexico and things like that. And so we bought probably about 20, I can't remember, but it was like 25 or so bank buildings. Some of them were vacant and some of them were occupied. And so we basically went and repurposed them. So some we ended up like Gastonia, North Carolina. We ended up selling it to the redevelopment authority because they wanted to redevelop their downtown area. Others we actually did, a redevelopment ourselves and put in, a CVS, or we worked with a developer to sell it off. And then some of the ones that were occupied, we just, resold to investors. Or the easy, well, it wasn't easy, but it took a while to get it going. And then it was Bank of America, and they were interested in buying, their branch. So we ended up, selling it back to Bank of America. So we at least knew they could close.
Yep. Makes sense. What trends, do you see taking place right now in triple net, and also in retail real estate as a whole? And do you think, how do you think they will affect the asset class?
Well, the big thing is that we saw the trend early on with Walgreens, CVS, and Rite Aid, that they were all coming out of inline spaces in a shopping center and inside of malls actually, and going outside and wanting a drive-through. So, and there's a lot of tenants that were wanting drive-throughs and wanting to put, drive-through in, because there's buy online, pick up at store. And so the drive-through thing, part of that is that you can call ahead, you can order what you want, or you can order off their website and then just pick it up directly at their drive-through. So drive-throughs are going to be a big thing. And that accelerated during COVID because a lot of stores that you wouldn't, or restaurants that you wouldn't expect would be closed, like Steak Shack, like Chipotle. And those guys were actually closed too because they didn't have a drive-through and they were penalized arbitrarily. And so now Chipotle has all their new stores. They want to drive through. Shake Shack, all their new stores, they want to drive through. A lot of dollar stores want to drive through. So that's happening. So that's one of the big things. And then just the general trend that we saw in, like I say, and I can't remember the exact dates on this, but somewhere starting in, 2016 to 2018, we saw that tenants were coming out of malls and coming out of strip centers and wanting more visibility, more control over what their brand is, and, just, control over their destiny. And so they were switching to single tenant, triple net leases with, that type of thing. So, and, one of the most prominent thing is that Apple said they're not doing new mall stores. They're actually pulling their stores out of malls and going to freestanding because especially during COVID, they were closed.
Okay, I got you. I want to flip the switch and switch topics now because
Okay.
You're the blockchain real estate expert. I've never had anybody, I still have yet to learn more about this, but my first question to you is, what is blockchain real estate?
Well, the key thing that I really like to explain is that a blockchain is something that instantaneously can transfer value. So if we back up, you really don't know how your email works, and you really don't know how the internet works, but you do know that you get instantaneous communication worldwide. So you can send an email anywhere in the world and it shows up in a matter of seconds across the globe. Or you and I can talk from San Francisco to Chicago through the internet. So what blockchain is going to do is it's the rails of the new financial system. So all money, all assets, and all value is eventually going to be on a blockchain. And so what that enables is it enables, just like the internet enables communication, blockchain enables instantaneous worldwide communication directly peer-to-peer. You don't have to go through, if you don't want to, a bank. You don't have to go through PayPal. I can send you USD or Bitcoin directly, and within minutes, you'll know that you have that. The great thing about blockchain, if you put real estate on blockchain, is that value can be transferred instantaneously. So if I have a house and you have the money and we decide that we want to trade it, if it's on the blockchain, as long as you put up the money and we have a smart contract and the transaction goes through. So it's going to make real estate a lot more liquid. What I really specialize in are what's called security tokens. So most syndicators do, once you syndicate a property, you're locked into it for 5 years, for 7 years, for 10 years. And it really depends on how long the sponsor takes to do whatever they want to do, or if the sponsor wants to liquidate it at all. I can tell you a story from my own mom. My father died in 1986. He invested in a syndication in 1985. And my mom was stuck in that thing that didn't pay any money, that, basically took all her money. And then she ended up having to do all kinds of extra tax returns every year because it was a K-1. And then finally, during COVID, because it was a hotel, they gave it back to the lender. And so, my mom, who's in her mid 80s, had this worthless piece of, asset. And she ended up having to pay taxes on it because, the foreclosure, you get phantom income. So to make a long story short, with, a security token offering, it's the exact same thing. It's legal, per the SEC. It's doing it with all the regulations. But you have the ability that you could potentially trade it after a 1-year lockup period. And the really cool thing is that, for example, our fund is a 506c. So after a 1-year period, if you were invested in our fund and you wanted to trade, one of your shares or all of your shares, they could trade to accredited investors or non-accredited investors. So it's bringing more people into high quality real estate.
Okay. Yeah, that makes sense. Are all of your funds now set up this way, tokenized?
This is the first one we've done, and it's taken a lot longer than I ever expected because we needed to make sure that we were legally compliant. And the technology always promises to do certain things, and then when you get there, it's like, well, it doesn't do that. It's like, well, it can do that, but ours doesn't do that. So it's been a learning experience. We've had to work with our technology partners to actually, they were set up to do more like stock issuances and things like that. So real estate is a different animal. And then real estate is taxed differently for non-US investors. So we had to spend a lot of money to get that straightened out too.
With the tokenization that we're talking about, and are brokers able to to sell this stuff as well?
Yeah, it's basically going to be the same thing, as
like a mutual fund or something like that.
Yeah. But and the other thing is with the security tokens, you can go peer-to-peer directly. You can list them with a securities broker, like a broker dealer or a registered rep to sell it for you. There's also these things called ATSs, which are automatic trading systems, which are similar to exchanges like a stock exchange. And then there's full-blown security token exchanges where the tokens can trade on those. So for example, there's a coin called Aspen coin. It's a St. Regis Aspen in Aspen, Colorado. And that's trading right now on T0.
That makes sense. Okay, so these security token offerings ever replace private real estate syndications? What are your thoughts on that?
I believe that they will. I believe that once investors experience, at some point, investors are going to say, well, why would I do it, except for, if there was really experienced syndicator and somebody that they really knew well, but institutional investors and syndicators or syndication investors, private real estate investors, are all going to take a look at it and say, well, why would I want to lock my money up with you when I don't know when I can get out of it, versus if I've got the exact same thing and close to the exact same deal and it's got all these extra benefits, why wouldn't I want this? And then the other thing that these type of security token offerings can do is you can get your money paid as an ACH payment directly into your bank account in dollars, or you could get your money paid to you in a USD stable coin, or you could get your money paid to you in Ethereum. So you could potentially dollar cost average out of the dollar. And we set up an agreement with a company called BlockFi. And so you could take your USD stablecoin, deposit it at BlockFi. So you're not only getting your returns from the real estate and all the benefits of the real estate and all the tax advantages of the real estate, but then you can deposit it at BlockFi and get an extra 6 to 8% on your money per month. Versus if you had the ACH payment directly into your bank account, you're going to end up paying Chase Bank, $30 to $50 per month for, the bank account. And you're not going to get any interest on your money.
I get it. Sounds like, it's
different. So you get extra flexibility as an investor.
That makes sense. How will blockchain technology make real estate more traceable and accessible?
Well, I think what it's going to do is at some point, it's going to open up, real estate investing in other countries where, you can just buy a piece of a property, or you can buy a tokenized property anywhere in the world. And, what I envision, and it might go this way or it might not go this way, but I envision, somebody in the Philippines deciding that they want to invest in a, London office building, or, somebody over in the Ukraine, wanting to invest in a shopping center or a multifamily property in the United States. We actually have had a lot of interest from Turkish investors and Venezuelan investors and South American investors, places where they don't have money that's stable. And we can, talk all day long about, how much the dollar is going down, but at least it has a little bit of stability.
Mhm.
But those places like Turkey last year, I think they lost, 40 to 50% of the value of the lira. So they're interested in something like this, where they can put their money into, basically like a real estate stable coin. So they get out of, something unstable, and they can get into something stable that, their money is going to at least give them cash flow and at least be, appreciate.
Yep. Okay.
Versus, losing all the value of their money.
Yeah.
And we've also had interest from South Africa.
Yep. Makes sense. And I have a question for you, because you've been in this game for quite some time. What have you personally learned from real estate investing during the last 4 economic downturns?
The saying that history doesn't repeat itself, but it rhymes, is, very true. So they're never the same. There's always a different twist to it. But a lot of the stuff is still the same. If you just happen to have cash during a downturn, it's a time to make, a ton of money. The other thing is that if you're over leveraged, you're going to have a lot less, room to maneuver during an economic downturn. Thankfully, we've made it through, and we've always paid our investors, and we've paid off every bank. So, it's just, we've been very conservative. We've missed out on, some of the really high highs, but we also didn't have to give back a bunch of stuff. We ended up, most of the time, like, so for example, when we started in 1990, we were doing workouts for banks and insurance companies, and that's when they foreclose on a property and take it back. We managed it, we, packaged it, and then we sold it off for them. And we've done the same thing through other downturns. COVID, there wasn't much of that because the Fed just basically backstopped everything. So there's probably going to be some more properties coming back, now. But during COVID, there wasn't as much need for, doing the workouts and foreclosures.
Got it. No, thank you for sharing all of that. I have some final questions for you. So what are you excited about in your business right now?
I'm really excited about the opportunity with blockchain to change the financial system. I'm really excited about the opportunity for blockchain to create human flourishing. There's all kinds of people throughout the world that went from abject poverty in 1990 to, now the middle class, and they're going to look for a place to preserve their wealth. And take a look at, the game that they play on Wall Street. And I was invested in it, in the ups and downs and the insider and everything. And it's like, why not just go with something, stable, cash flowing, and also tax advantage, but also something that is going to be an asset that somebody can. So the other thing that we see with security tokens is you might not have to sell them to get your money. You could potentially take your security token, pledge it as, an asset, and borrow against it.
That's something new.
Yeah.
Are there many players that are setting up, their funds or, their offering is this way, using blockchain? Mm-hmm.
Yeah, there's a lot more of them out there now. When we started out in 2019, 2020, there wasn't many, but now there's a lot of interest. The reason why we did the blockchain real estate summit in September 2021 was to explain to sponsors and also to investors how this technology works, how to do it legally, and to say it's not that intimidating because it's exactly the same thing as a normal syndication. It just has the ability to trade and it has these extra benefits. So you need to know a little bit more about the legal part, about how they can trade and what, is the legal qualifications for that. And you need to know a little bit about, the technology people that are actually, the issuance platforms and things like that. And you need to know a little bit about, what a blockchain is and what it does. But other than that, that's why we decided to do more education so that more and more people are comfortable with it. More and more people see the benefits of it, because whether you like it or not, cryptocurrency and the financial system, and even the Fed wants to do, their own Fed coin, which is going to be on a blockchain. So this is coming. It's going to be a major part of your life. And, I can't tell you whether it's going to be in 5 years or 10 years, but, at some point, most financial products are going to be on a blockchain, and even non-financial products. So for example, if a musician sells a ticket to a concert, they can sell that ticket as an NFT, and, they can get any money on the resale of that, or the NFT could become a collectible ticket. Just like tickets when I was younger, and going to, like Led Zeppelin and Jethro Tull and the Who, those ticket stubs were collectibles. So
that makes sense. Another question: what has real estate investing done for you in your life?
Well, it's kept me busy and out of trouble. So that's made my mother happy.
What does success mean to you? What does success mean to you in your own world?
I like to look at success as more significance. Am I contributing to society? Am I, making the world a better place? Am I adding value? So in all of our deals, am I adding value? Are people making money? Are they, happy with what they're doing? If we're doing, lease deals, are we, making a deal that the tenant is happy with and they're going to pay and they're going to be there for a long time? Is it, going to be a long-term relationship? And you look at that because you end up basically eating your own cooking if you've owned properties for a long time. So we've got one that, we've had for 32 years. So, we've had some tenants in there, for much longer than that, but you have to, look at it from a long-term perspective. And then the other thing, I really think, are you improving your community? Are you improving the world? Are you doing something that's, going to make the world a better place? So, and along with that, I believe that the more people you help, the more money you're going to be able to make.
I love it. Do you have any open funds that you're raising money for?
Yeah,
go ahead.
The Liberty Fund, which is the triple net, real estate security token fund. We are in the middle of raising money for that too, to buy additional properties.
Okay, got it. Any other, last comments or anything that you want to, say to the audience before we wrap up?
Well, I really appreciate you having me on here. I really appreciate the opportunity to, I feel education is important. So the more that you can learn about stuff, and, when I was just out of, college and everything, I had to get most of my information from like Forbes magazines or, books and things like that. There's so much education out there now. So, you can learn just about anything. Yeah. Would you like me to give, because we do have a blockchain real estate investing report that if somebody goes to our website and clicks on the special report, they can get information on, what blockchain real estate investing is and a little bit more about that.
Yeah, absolutely. Talk about that and also talk about how somebody could get a hold of you.
Sure. So they can get a hold of me at hello@libertyfund.io. That's hello@libertyfund.io. They can go to our website and get the special blockchain real estate report. All you have to do is click the report button and you'll get that. And then we also have the Blockchain Real Estate Summit, which is blockchainrealestatesummit.com. And that we're going to do it again in Austin, Texas, September 23rd and 24th. And we just had conversations this morning about potentially doing one in Brazil and a few other ones in different parts of the world. And then we have the Nothing But Net podcast. If you're interested in learning more about net lease properties, you could go to triplenet.re, or all the podcasts are on our website, libertyfund.io.
Thank you very much. Well, thank you, Michael, for joining me on this episode. Thanks for your time. I found conversation very enlightening, valuable, and definitely educational, as especially blockchain is something completely foreign to me. So thank you very much. To my listeners, no, absolutely. Thanks again. To my listeners, feel free to reach out to Michael directly should you have any more questions, for him, or questions about blockchain or his fund. And also, thank you for checking out this episode of The School of Cash Flow. Remember to leave me a podcast review on iTunes, as it helps me attract more great guests just like Michael. So until next time, live life abundantly.
Thanks for listening to another episode of The School of Cash Flow. We hope you enjoyed our deep dive into all the tips and tricks you can use to help you on your passive investing journey. In the meantime, you may visit www.cashflowschoolpodcast.com for more great episodes. Don't forget to subscribe, rate, review, and share. That's all for this episode, folks. See you next time.